Veterans are losing multifamily deals right now, not because their VA loan is weak, but because they're writing the offer wrong. I'm watching it happen all the time. A veteran finds a duplex, triplex, or quad. They get pre-approved. They write a clean offer at asking price and still lose to a conventional buyer offering the same amount of money. The financing was never the problem. The structure of the offer was. So today, I'm going to show you exactly how to build a VA offer on a multi-unit property that a seller cannot easily pass over. And I'm going to show you the one number that kills more VA multifamily deals than anything else before you even ever get to the negotiating table. Before we get into this, if this is your first time here, do me a favor, hit that like button, subscribe, and tap that notification bell. I put out real estate content for veterans and first responders 3 times a week, straight information, no BS. My name is Bud Evans. I spent 35 years in the U.S. Air Force, 13 years as a police officer. I served as the mayor of Cinnamints in New Jersey. Today, I'm an active real estate investor focused on single-family and small multifamily properties across 4 states. I mentor veterans and first responders who are looking to get into this business, and I founded a low-cost property management company in South Jersey built for investors by investors, not for corporate landlords. So here's what most investors believe going into a multifamily purchase. They believe that their pre-approval letter is strong and their offer price matches their asking price. The deal is basically theirs to lose. That's what they think. They get pre-approved, they write a fair offer, they wait for the seller to say yes, and that mindset works reasonably well on a single-family home in a slow market. But on a multifamily property, especially a triplex or fourplex, it's going to fall apart fast. And it falls apart for 2 separate reasons that most veterans never even hear about until it's too late. Their first reason is the perception of the seller. Sellers and their agents still think about outdated assumptions about VA financing. They assume it means a slower close, a stricter appraisal, and a higher chance that the deal is going to fall through. When 2 offers land at the same price, one VA and one conventional, a lot of the listing agents will steer their seller towards the conventional buyer, even though VA loans close on comparable timelines and have closing rates equal to or better than conventional loans. That perception will cost a veteran real deals, especially in a competitive market where sellers get to be selective. The second reason is one nobody really warned you about, and it's more dangerous because it can blow up a deal after you're already under contract. It's called the self-sufficiency test, and it applies specifically to triplexes and fourplex purchases. Here's exactly how it works. The lender takes the fair market rent from the units that you're going to not occupy and discounts it by 25% to account for vacancy and turnover. That discounted number, 75% of the rent, is not the target. It's the tool. The target is 100% of your mortgage payment, principal, interest, taxes, insurance, all combined. That discounted rental figure has to cover the entire mortgage, not just a portion of it. If it falls even $1 short of the full payment, the loan can be declined. Not delayed, flat out declined. Here's where the rising problem turns into a real conflict. I've watched veterans fall in love with a fourplex, write an offer based on the seller's claimed rent numbers, get the offer accepted, put down earnest money, and then find out 3 weeks into the loan process that the appraiser's actual rent schedule came in and it's lower than they said. The self-sufficiency math will fail. The lender won't close the loan. The veteran lost their earnest money deposit, lost weeks of time, and in some cases, they lost the ability to make a strong offer on anything else because their pre-approval had to be rebuilt from scratch. That's not a hypothetical. That's a Tuesday in this business if you don't know what you're doing. The financial damage will compound from there. A veteran who loses a deal on a fourplex because of a failed self-sufficiency test does not just lose the property. They lose momentum. They start second-guessing whether a multifamily investment was ever realistic for them, when the actual problem was that nobody actually ran the numbers correctly before the offer went in. I've had veterans tell me they're done with multifamily and going back to single-family homes entirely based on one bad experience that was completely avoidable with the right process up front. If you're working through a purchase like this right now, or you're about to get your first multifamily offer, this is exactly the kind of situation that we work on in the War Room with David Perret. It's a community of veterans actively buying real estate, and questions like this get answered by people who have already done this. I'm active in there and have been since 2019. The link is in the description if you want to book a call with me and talk about it. If you want direct one-on-one help structuring a specific offer, that's what budevans.com is for. The War Room is where I want you asking these questions first, though. I don't have a program, so you can book a one-off call with me if you need. Now, let's fix this the right way. You run the self-sufficiency math before you write the offer, not after. This single change in sequence prevents almost every failed multi-unit VA deal I've seen. Start with the property's actual numbers, not the listing agent's numbers Pull rent comps for the specific unit mix from active listings and recently leased units in the zip code. Multiply the total monthly rent from the non-owner occupied units by 75%. That gives you your usable rental income for the test. Now calculate your full projected mortgage payment, principal, interest, taxes, and insurance at the current rate. These two numbers have to match or your usable rental income has to be higher. The discounted rent figure has to cover 100% of the mortgage payment, not 75% of it. If it doesn't reach the full payment, you either need a lower purchase price, a different unit mix, or a different property. Do this math before you ever ask your agent to write the offer. Know your number before you go in. All right, second, get a fully underwritten pre-approval, not a basic pre-qualification letter. A fully underwritten pre-approval means your income, assets, your credit, they've already been reviewed by an actual underwriter. This is the single strongest tool that you have to overcome the seller hesitation about VA financing. A listing agent who sees a fully underwritten approval knows your file is close to bulletproof, and that's going to change how your offer gets treated in a multiple offer situation. Third, structure your earnest money to signal seriousness. VA loans don't require earnest money by rule, which feeds the outdated idea that VA buyers have no skin in the game. Offering 1 to 3% of the purchase price as earnest money flips the narrative immediately and puts you on a more equal playing field with conventional buyers. Fourth, build an appraisal gap plan before you negotiate the price. The VA appraisal is mandatory and cannot be waived, but you can offer to cover a defined gap amount in case the appraisal comes in low. This tells the seller the deal is not going to collapse over a value dispute without you giving up the VA escape clause that protects you if the property is genuinely overpriced. Decide your maximum gap coverage before you start making offers and only offer what you can actually fund. If the appraisal does come in low, you have a 48-hour Tidewater window to submit stronger comparable sales data to the appraiser before the value is finalized. Have your agent pull comps in advance so you're ready for this, so that you can move fast if the window actually opens. Fifth, understand how seller concessions actually work on a VA loan so you don't leave money on the table or make an ask that's going to spook the seller. Standard closing costs, title fees, escrow, recording, they have no VA cap and can be paid by the seller on top of everything else. Seller concessions, things like funding fee, prepaid taxes and insurance, or a rate buydown, are capped at 4% of the home's appraised value. Ask for exactly what you need in dollar amounts, not in vague percentages, so there's no confusion during the underwriting. Get your Form 1025 conversation started with your lender early. This is the appraiser's rental income form in multi-unit properties, and it's what ultimately determines whether your self-sufficiency numbers are going to hold up. Ask your lender how they handle Form 1025 timing and what documentation you need if the units are already leased, or what market comps the appraiser is going to use if the units are vacant. All right, let's recap what you need. As always, I'm going to give you a checklist. So, number one, run the self-sufficiency math before you write an offer on a triplex or fourplex. Discount the rent from the non-owner units by 25%, then confirm that number covers 100% of the full mortgage payment. Get a fully underwritten pre-approval from a lender who regularly closes multifamily VA loans, not a basic pre-qualification letter. Offer 1 to 3% earnest money to remove the perception that a VA buyer has nothing at risk here. Set yourself a defined appraisal gap coverage amount before you negotiate and know your Tidewater comp strategy in advance. Then separate seller concessions from standard closing costs and ask for concessions in the exact dollar amounts within the 4% cap. Start the Form 1025 rental income conversation with your lender the moment you go under contract, not weeks later when they start asking for it. Then confirm every unit in the property, including the ones you're not going to live in, will pass the VA minimum property requirements before you remove your appraisal contingency. Hey, look, if you found this useful, hit like, subscribe, hit the notification bell, and share this with a friend that you believe benefit so that you can catch the next video when it actually drops. All right, thanks for watching. I'm Bud Evans. Aim high, execute fast. See you on the next one.